oil futures, DeFi hacks, and the future of Bitcoin, all discussed today. Stay tuned.
Hey, I'm Cap.
I'm Signoff.
And we're with Particle.io, and this is Breaking Bitcoin.
It's the best opener ever, guys. Welcome back to Breaking Bitcoin. We are live every afternoon at 12 p.m. Central Standard Time, your daily source for everything markets and finance. I'm your host, Justin Wise, lead analyst and senior mentor at CrackingCrypotcurrency.com. Hopefully you guys are doing absolutely fantastic. We've got such a good show for you today. If you are looking to develop a verifiable systems approach to your trading strategy, there's a lot of free time on your hands. A lot of people obviously on lockdown, sitting around the house, not doing a whole lot. Don't just sit on the couch and Netflix. Utilize this time to your advantage. Learn how to build a good trading system so that you can come out of this a smarter, faster, stronger human being. Join our community. Take advantage of our signals and trade setups, premium indicator suite, pathways to profit, strategy building course, community mentoring, much, much more. Sign up today for the premium trading group at premium.crackingcryptocurrency.com. That's premium.crackingcryptocurrency.com. Like I said, we've got so much to talk about. As I said yesterday, I took a deep dive into the oil futures. We're going to be talking about the oil futures a lot today. We also have an update on the DeFi hack and exploit that we talked about yesterday, where millions of dollars in Ethereum were taken and, well, let's just say recovered, but we don't know. Conclusions as to why the funds were returned might be speculative. We're also going to give an update on the crypto saga that is Libra, whether or not we can actually definitively call that a crypto saga or not, but it's certainly a saga, and we're certainly going to be giving an update on it. And then, of course, we're going to be breaking down price action. A couple of things that I'm watching quite closely. Mainly traditional markets. We're going to look at those as well, look at how the ETFs are actually responding. And more importantly, I want to look at how the oil ETFs are actually responding to price, because for the most, for the American crowd watching, that's going to be your most readily accessible way to actually get oil's exposure. But of course, in today's show, I'm actually going to walk you guys through how, if you want to, you guys can actually go trade oil futures. I'll show you how to set that up. We'll talk about brokers. We'll talk about maintenance margin, et cetera, et cetera. With that being said, let's get right into today's show. So much to talk about. If you guys are watching for the first time, make sure to smash the like button. Otherwise, YouTube will not show them to other people. If you subscribe, then you will know that we put out new videos, but not unless you hit the bell icon. That's the only way to know. YouTube does not want you to know that we know that we've put out new content. Somewhere in there, it makes sense if you twirl it around somehow. But smash the like, guys. Subscribe. Let's get right into it. All right. All right, back in the main scene. Gotta love that camera angle switching. We'll get over to that scene here in just a little bit. All right, I'm gonna get over there in just a little bit. Give you guys an update on the trading competition. Of course, we got Roycoin in first place. We're having this trading competition, 4-week trading competition over here on ByBit. Roycoin leading the chart still at 114% PNL. We've got Unnamed Killer at number 2, Unnamed Killer at number 3, Mr. Hut QC, the man, the myth, the legend, knocking it at number 4, GYTHG at 5th place, and then Crypto Sophie, this is me, clocking in at a nice 5.79% for the month. Nice and steady, slow and easy, a nice algorithmic strategy that I'm running per PTP methodology on lower time frames, but just something that is completely automated. And it's locking in a nice 5, 6, 7, 8% a month for me over here on the futures. And, listen, I got to say this, Payday, my man, locking it in, dude. It's good to see you, man. It's good to see you. All right, overall, good performance from everybody. I'm happy. I am happy to see everybody doing well. All right, so the first story I want to get into, update that we covered yesterday. So I decline. I do not accept your cookies. These are not the cookies that you're looking for. All right, so in yesterday's news, we covered the exploit that took place on the dForce DeFi protocol. How about $25 million worth of Ethereum-based assets were stolen by the attacker. Well, it seems that the attacker has had a change of heart, and the stolen funds appear to have been mostly returned as of the time of recording. So this is from Larry Cermak. We're going to take a closer look at what actually happened yesterday, because as we discussed yesterday, the attacker apparently didn't cover his tracks very well. And authorities were hot on his trail within just a few hours of the heist. So to quickly summarize, on Saturday night, an attacker exploited a vulnerability in the lendf.me protocol. Lendf.me, for those who don't know, is popular over in Asia. It is an open source lending platform running on the dForce network. Like most DeFi protocols that we can find running on Ethereum today, Lendf.me functions by matching a supply of lenders and a supply of borrowers for Ethereum-based tokens, right? It's matching supply and demand, and they're the middleman in the middle. In the case of Lendf.me, it allowed for users to deposit ERC20 stablecoins to earn interest, or users could borrow supported digital assets using their deposited funds. Their deposited funds of choice, their deposited crypto of choice as collateral. Pretty standard stuff in the world of DeFi, stuff that we see all the time. Now, the attack drained the entire dForce network for about $10 million worth of Ethereum and another $15 million in various stable coins and ETH-wrapped Bitcoins. So warped Bitcoins, wrapped Bitcoins. All right, so this is an update from Medium. In a recent Medium post, the security researchers over at PeckShield detailed how the attacker exploited a bug in the lending function that approved the release of funds in collateral exchange for IMBTC. Now, IMBTC is a token on that platform which pegs Bitcoin and Ethereum. If anyone wants a more technical dive into the code that was actually exploited in this attack, this Medium article is actually a good read by PeckShield. You can search for it on Medium. And what's also been revealed is, in this analysis, is how the lendf.me protocol actually ripped off some of its code from another DeFi protocol, which is Compound. Robert Leshner took the opportunity to absolutely flame dForce here by accusing it of stealing Compound's code. And it's no surprise, therefore, that the developers did not have the capacity to properly audit or maintain their own security practices because they didn't write the code in the first place. But of course, as we mentioned, in a pretty shocking turnaround, the attacker appears to have returned the majority of the stolen funds. This includes the lion's share of his haul, the $10 million in Ethereum, but a little was missing because some of the stable coins and other assets had been exchanged for other cryptocurrencies along the way before that attacker had that change of heart and returning what he could when he did. Now, as to what drew the attacker to go from stealing, then converting the funds into Ethereum using other DEXs in an attempt to get away, just to end up returning it days later, well, as we mentioned yesterday, he apparently didn't do a very good job at covering his tracks, right? As I said, he seemed to be a good coder, not a good security expert. When moving the stolen Ethereum and other crypto goodies to those decentralized exchanges for their big wash, the attacker only used a simple VPN or proxy server, which, while more experienced attackers would have been doing these transactions through a decentralized network like Tor. And this blunder ended up leaking valuable metadata, including the attacker's IP address, leaving a trail that could lead to a subpoena of his VPN service provider. And in the context of a Chinese attacker using a Chinese VPN provider, it's likely that the authorities could have tracked this attacker down in no time if they had not already. Now, Sergey Kunz, he's the CEO of the 1inch decentralized exchange, was one of the DEXs the attacker used to launder his stolen funds, and he openly discussed the issue and his role in taking down the user, as it was the metadata collected by the 1inch DEX that helped everyone resolve the situation in the first place. And a lot of people are pointing out to Kunz and others cooperation in this investigation is highlighting a pretty good example of industry collaboration and support across open decentralized networks, how we can actually rein in attackers. Now, on the flip side, even with the seemingly happy ending to this tale and the $25 million in funds restored, DeFi's reputation has, of course, taken yet another major hit this week. So, of course, as we've said many, many times, we have to be careful about which decentralized finance protocols we trust and utilize. There is a difference between supporting a network and a difference between investing all of your time. But now is your time to sound off. What do you guys think about this latest DeFi hack and its resolution overall as it pertains to the larger DeFi movement? Is this just another bump along the road to decentralization, or is this a scathing example of how untested smart contracts can lead to millions of dollars in losses for the unwary? Let us know in the comment section down below. We'll do our best to respond to you within the next 24 to 48 hours. Moving on to our next story, of course, I wanted to cover this because this was pretty much all I was asked about yesterday. So all the buzz, even during the course of yesterday's show, was around oil markets. Yes, oil on a crypto channel. Of course, we do a lot more than crypto, but oil. You may have heard a lot of noise about oil markets since yesterday. Well, that's because Monday April 20th, a day that will live in infamy. For it was this day that the price per barrel for the upcoming futures contract on West Texas crude went below zero for the first time ever. And it wasn't just the WTI crude going negative. May futures contracts on Canadian Western Select crude tumbled below zero as well yesterday. In fact, about 2 p.m. Eastern Standard Time yesterday, April 20th, the futures price on U.S. crude fell below zero for the first time in history. And a little over an hour later, the price dipped as low as negative $38.08 per barrel. So everyone is curious. How did this happen? How can prices on oil go negative? Well, to understand that, we really have to start with understanding the macroeconomic conditions that go into this equation. The world economy has seriously slowed in the wake of the COVID pandemic. Amidst widespread lockdowns and restricted travel, demand for oil and all its subsidiaries has dropped dramatically, and falling demand necessitates lower prices. And let's not forget that the supply war has been raging with major oil producers, Russia and Saudi Arabia, in recent weeks. That's been a major catalyst for sending crude tumbling this year. As we talked about last week, the OPEC and OPEC Plus meeting ended with Russia and Saudi Arabia essentially going back to their countries and ramping up production instead of ramping down. Now, of course, they're angling for a greater market share and long-term prospects coming out of this pandemic environment. But in the short term, in the case of the May 2020 futures contract on crude, we have to ask, why are prices dipping to below negative? It comes down to the issue of who holds the contract when it expires today, April 21st, 2020. Because oil futures are physically delivered, the oil futures trader who happens to be holding this contract by that time has to either take physical delivery of the oil or find someone, preferably a buyer, willing and able to do so, willing to actually take physical delivery of this product. Now, to take physical delivery for just one contract means picking up and storing 1,000 barrels of oil. That is no small task. Physical delivery often takes place in Cushing, Oklahoma. It's the largest crude oil storage hub in the United States of America and an important junction in the settlement of West Texas crude that's traded on the NYMEX exchange. Now, being designated the official delivery point for U.S. crude means it's the most significant trading hub for crude oil in North America. Now, although Cushing is home to some 300 steel oil storage tanks in the surrounding areas filled with tank farms, most of them are already full up thanks to the COVID shutdown, having already slowed the economy for weeks, and it's only getting fuller now. Indeed, oil reserves across the nation are at capacity. There's nowhere to store the latest crude due to be delivered for May. This means when the price of the May 2020 contract hit around negative $38 per barrel, futures traders left holding the bag on these contracts would have to pay someone else $38 to take the oil contract off their hands, to take the oil off of their hands, because they're not going to be able to facilitate physical delivery. Now, Roger Dewan, who is a London-based analyst from IHS Markit Ltd, launched into a tweet storm yesterday explaining what we can expect from WTI futures going forward into the year of 2020. It was this rollover of the contract and a liquidity crunch that made today's extreme sell-off possible, he says, but it doesn't necessarily represent the actual condition of the futures market. So in other words, don't panic just yet when we're talking about the actual price of crude. But the June oil contract is not out of the woods with Monday's price action telling us that the physical oil markets being settled in Cushing are not in good shape and that national storage is getting very full. And with the June contract price down 15% already, real concerns are, of course, mounting that the stress on the supply will continue and force a lot more oil production and refinery shutdowns during May than the ones that have already been announced. Therefore, Monday's negative prices do reflect a dire situation for oil producers, and the hope rests with demand being rebooted in the middle of May in order to prevent a June contract from a similar calamity. Now, earlier today on CNBC, Kate Richards, the CEO over at the energy-focused Warwick Energy Group, described the market drama yesterday, saying that trading of the May contract that went negative accounted for 7% of all trading volume yesterday, explaining that what happened yesterday was, of course, certain players being long about 108,000 lots of the futures contract. Keep in mind, one lot is 1,000 barrels of oil, and they had not yet closed out their long positions, but finally were forced to close out. And once that time came, they were willing to pay someone to take the contract rather than to get paid for the contract and be stuck taking physical delivery of that crude oil next month. Finally, she warned that the remainder of the futures contracts for 2020 and even into 2021 will likely suffer from being priced too high as of right now. Now, looking at the latest data, the June 2020 futures contracts trading around $16.97, down $3.46 today, about 17%. As for the May contract, it's doing a lot better than yesterday's intraday low, but still actually now trading above zero, right? Let's see. I want to check on that because it's been volatile over the last few. Let's see here. Now closing at 941, so back in the positive, no longer negative, opened at negative 14, closing currently at $9.44. So no longer negative, up quite a bit from yesterday's lows. Of course, many of us in the cryptocurrency space who for years have kind of suffered at the butt of Bitcoin is too volatile jokes, found some humor in seeing prices on a commodity like oil tumble to below zero with, of course, crypto personality, let me find the link here. Barry Silbert saying on Twitter, Bitcoin saying, I like to move up and down 5% every day for no apparent reason. Oil saying, hold my beer. So, good stuff. Good times. Now, the question is, for a lot of people watching, this has generated, and that's what I like about situations like this, because this obviously generates a lot of interest when people see these big price movements as how they can capitalize on these things in the future. And let's be quite real. One thing you want to ask yourself, right? Do you have any experience with trading commodity futures? Have you ever traded oil futures before? Do you know what the differences in types of crude are? These are things that you probably want to know to trade oil futures. Just might help. But if you want to trade oil futures, I will show you how you can do that. Now, oil futures in the United States, this is for Americans. Oil futures in the United States, futures are going to be traded on the NYMEX exchange, right? So you're going to need to find a broker for oil crude on the Chicago Mercantile Exchange. Now, you can go to cmegroup.com. They've got a tool here to find a broker, because the first thing you're going to need to do is find and locate a broker. I've gone ahead and taken the liberty of putting in what I think most of you guys are going to be sitting at, which is an individual trader investor. You're going to be speculating on futures, and you're going to be located in the United States of America, and you're going to want the English language to be supported. So you've got a lot of options here, but of course, the ones that stick out, they're going to be simple, are going to be obviously TD Ameritrade, E-Trade, and then, of course, the one that's probably the most popular is Interactive Brokers, right? So for the purposes of this, and because I know good things about Interactive Brokers, I'm going to say that that's most likely your best bet in terms of functionality. You also want to make sure that you understand the initial margin that you're going to need to trade these contracts. This means that to trade one lot, that is 1,000 barrels, you are going to require the maintenance margin as a minimum on your account to open up the position. Now, in general, and this is coming from Mr. John Ellers, who I interviewed, because he has experience trading these futures markets. What he said is that what he likes to do is take the initial margin, or the initial margin that you need to open up the position, plus the capital necessary for 10 losing trades. Because it's almost essential, if you're trading an automated strategy, that you will at one point during the course of a year, if you're trading every single day intraday, that you will have a losing streak of 10 losing trades. So you want to have enough in your bankroll to be able to trade. So assuming, depending on what size lot that you're trading, assuming that a losing trade is, let's say, $500, you need, a $5,000 as well in additional margin. So you need about $10,000, $12,500 to trade the continuous contract in front. Because as we can see, the maintenance margin for that is $7,500 US. As you go further out in the contracts, the maintenance margin goes down, the initial margin goes down. So these are important things to consider, but you are going to need this minimum amount of base capital to begin trading these contracts. And let me again put that into context for you. If you have never traded futures before, when you go onto the futures platform and you go onto your broker and you put in the number of lots to trade, if you just have this amount of maintenance margin plus the initial margin for the contract, and whatever excess capital that you have to cover losses, you're going to be trading one lot, just one. So you know how on BitMEX and ByBit, you can put in amount of contracts, right? Or quantity of coins on Binance, you're going to be putting one in that box, right? And that's how much that's going to cost you. And then, of course, Interactive Brokers is the broker where you can sign up for that. And again, this is not like crypto. You have to do KYC. You have to put all the information in, but that's how you can get started. Again, please trade these things with caution. Just as we say with trading cryptocurrency, it's highly volatile. And realistically, you are trading against some of the most seasoned and professional market speculators out there when you step into CME futures. So Have your game about you, have your wits about you, do your research, trade safely, do not take excessive risk because they will chew you up and spit you out. So trade safely, a lot of opportunity over there, but also weigh realistically, like what are the odds that, and I don't mean this disparagingly, but if you are a random Joe off the streets who has never traded oil futures before, you're seeing all this volatile price movements, the probability for you to make a mistake and end up losing a lot of money as opposed to making a lot of money against professionals who do this on a day-to-day basis is fairly low, right? What are the it's very rare that an opportunity is so glaring that you can just run in off the streets and snatch up a profitable trade. So take that into account. I'm not saying that there's no opportunity there. I'm just saying that it may not be as sweet as it may appear on the outset, right? All right, with that being said, the last story that I want to cover before we get into today's market analysis is going to be an update on the Libra story, right? So an update to the saga that, that is, of course, the Facebook Libra project, which is a topic that we've covered a lot on this show in 2019 and 2020, but we talked about this a lot in 2019. So as we know, Libra was met with strong skepticism from policymakers in the United States and indeed around the world. And it's forced the project to go back to the drawing board, and that has resulted in an updated version of the Libra white paper being produced in an attempt to get back in the good graces of financial regulators. But if the comments from Texas Democrat Sylvia Garcia, who is on the House Financial Services Committee, are any indication, Libra hasn't actually done much to appease these bureaucrats. According to her, the new Libra white paper does not contain any substantive changes, and their proposed token should, in her opinion, still fall under the scrutiny of the United States SEC, the Securities and Exchange Commission, watchdog in the United States government. In her view, the newly proposed version of Libra still derives its value from a basket of digitized currencies that are subject to the regulatory authority of the Libra Association, which is an independent organization whose members include major corporate players like Andreessen Horowitz, Kiva, Lyft, Payu, Uber, Spotify, among many others. In the light of this fundamental tact concerning Libra, she said she will make sure that the SEC regulate the Libra asset as the security that it is. Now, back in 2019, at the peak of the Libra controversy, Maxine Waters, Democrat from California, and the chairwoman sitting on the FSC, demanded that Libra halt the development work of its core team so that Congress could question both Mark Zuckerberg and the head of the Libra project, David Marcus, in order to determine the legality and overall utility of what they wanted to do with the Libra currency. And as members of Congress feared, absolutely, that it would potentially threaten the United States dollar supremacy, as well as endanger many other smaller fiat currencies, in their words. Of course, when Facebook first revealed the concept behind the Libra token back in June, social media giant wanted to create a single digital currency, one designed for users of various different platforms to facilitate transactions without the use of any sort of traditional or local financial infrastructure, right? Completely untethered to your local currency. Now, since then, they've changed their tune a little bit because they've gotten a lot of international scrutiny and a litany of complaints. They have seriously scaled back the idea of a single token pegged to a basket of international currencies, which was their original idea. Instead, they have revamped their white paper in an attempt to appease the financial overlords, because instead, they're going to be establishing a variety of different stablecoins, with each one tied to a specific fiat currency rather than a one coin to rule them all approach, shall we say. Now, Marcus from Luno pointed out how Garcia was one of two representatives who tabled the Managed Stablecoins Are Securities Act of 2019, which major aim was to have the Facebook stablecoin classified as a security. Like, the entire purpose of that bill was just to classify the Libra token as a security. So it does come as little surprise that that same representative is now challenging the latest version of their white paper, describing how the revised Libra Association white paper, dubbed Libra 2.0, did in fact make substantial changes to the way the stablecoins are now, or now stablecoins operate on its network. And this is an area that should be open to discussion with policymakers. Now, there hasn't been any definitive ruling in regards to how the SEC views stablecoins, whether they view them as a security or otherwise. According to the representative from Luno, the problem is that stablecoins will replace part of a financial system that is currently responsible for classifying and regulating them. According to let's see here. Where's the quote? According to Siddharth, CEO of Cribacco, Libra has some unique features which make its performance on the Howey test questionable, right? The Libra asset could still fall under the SEC's oversight because of a few niche aspects that are far too advanced than anything the traditional global payment system normally offers. But saying that it won't satisfy the Howey test because it's not really a security investment. But due to its manipulative nature, there is a scope of deriving profits by taking advantage of the currency rate difference, the differences in the exchange rates on its underlying basket of currencies, right? So even here, it's not passing the Howey test. There are still chances of generating profit from cross-border arbitration. Furthermore, Libra does not use the traditional SWIFT protocol to settle accounts and transactions. Instead, Libra is designed so that transactions native to its network are settled in a peer-to-peer fashion, similar to how cryptocurrencies function in general. But as Sagani also pointed out, if a user is holding their balance in Libra, and Libra is supposed to keep the money safe, secure, and pegged to fiat until it's actually used, that means that Libra falls under the SEC's jurisdiction, as they are allowed to interfere when the rights of the consumer are involved. Now, the question is, does the update to Libra make it any less or more of a real crypto? Well, with the latest version of Libra coin having several versions, including the digital dollar version, a euro Libra token, a British pound Libra, and so forth and so on. All of these will be accounted for and circulated using the Libra native blockchain. So the Libra ecosystem still remains fully permissioned and features very little decentralization, which in many ways precludes it from being defined as a cryptocurrency, right? According to consensus, this centralization and permission nature is precisely what makes Libra so dangerous. Yet at the same time, makes it, unfortunately, much more likely to be adopted than decentralized currency at the current point in time. Libra releasing its newest version of the Whitepaper makes Libra just a permissioned digital fiat currency that comes included with its own regulatory oversight, right? As countries all over the world gradually move toward a more digital mode of financial governance amid the ongoing coronavirus pandemic, we have good reason to believe that Libra does actually have a good chance of going mainstream now. It'll take a few more changes here and there, but eventually the regulators will allow it to pass. They have to. Otherwise, China with the digital renminbi will actually take the lead in digital fiat, right? Now, not sure whether the opinion of, there's going to be obviously legal arguments for and against Libra as things stand. If such assets are able to deliver genuine benefits to millions of people, then their use will help both the traditional finance sector as well as the crypto industry. But stablecoins won't really signal the end of the dollar or any fiat currency. So, yeah, it is what it is. But due to the simple fact that Libra is not a decentralized currency, but rather a privately regulated mode of transfer that uses some cryptography for security-related purposes, it still remains to be seen whether the crypto community at large, by and large, is going to be welcoming this new asset. I mean, obviously, listen, there's a lot. This gets complicated. Because you have purists on one hand who don't want to see any kind of permission system, particularly, not wanting to see a corporate coin, right? On the other hand, and this is typically coming from those who are focused with human rights, the idea of a corporation having control of a currency system. And setting rules, and that corporation is subject to kind of the whims of the free market, right? So it is in a sense far more reachable and accessible than something that's run by the government. Government has the monopoly on the use of force. Corporations do not. You can boycott a company, you can petition a company, you can modify the rules of a company, and you can certainly do the same thing with the government, but it's just much harder to do because they can actually send the military at you. We do not yet live in the world of post-apocalyptic or dystopian future where each corporation has their own private military. We don't exist in that future yet, right? Regardless of where people seem to think that we are. So I still feel, as much as it is not the right solution, it is a logical stepping stone, right? Whether I agree with it or not, it is most likely a logical stepping stone between where we are now to where we want to be, right? And it all comes down to how successful it is, right? If using something like Libra gets people more interested in actually securing their funds and moving further and further away from legacy financial systems so that we can get away from debt-based models of economics and move toward a hard currency system of economics, regardless of all the flack that we'll get from we need good debt type economists. That's not true. Boom and bust cycles will not last forever. We are building we have built an unsustainable system of debt-based economics. I don't know. You guys sound off, please, in the comment section. I wanted to give you an update, let you know that Libra has backed off of its one coin to rule them all, and let you guys know where we're currently at right now. So please sound off in the comment section down below. It's a contentious issue. I just want to see what's best for the larger Bitcoin crypto community at large. With that being said, we're going to take a brief moment's break and switch over to the live scene so we can get into today's market analysis. Don't go anywhere. If you haven't already, make sure to subscribe to the channel, smash the like button. Otherwise, YouTube does not share our content to anybody else, and click the bell icon. Otherwise, YouTube won't tell you when we post a new video, which, by the way, coincidentally, is every single day at 12 p.m. Central Standard Time. We'll be right back, guys. Don't go anywhere. Wrong button. All right, and we are back in the live scene. Hopefully you guys are doing well. Okay, so we've got a lot to break down today. Let's get this thing started. Let's get my monitor actually up here just a little bit better so I can see what's going on. Okay. All right. By the way, good to see everybody in the chat. Midwest Attempts, we've got Crypto Jack, the Pie Guy, we've got ZX, Jose Caneta, AM Rod Financials, the Love, Success, and Life Show, Blue Box Territory, Maxifier, Gui, we've got Damian Hughes, Furry Boffin, good to see you, my friend, on the live stream. We've got Ginseng Rathor, Curtis C, Challenged Investor, Agency, good to see you. Ricky Thompson, I think I already mentioned you though, my friend. And if I missed anybody, I apologize. I also do see a super chat in here. Let's see what's going on. Philip Carr, Manchester Mint Crypto, man. Thank you so much for the $9.99 in sterling pounds, my good brother. Hopefully you're doing well over there in the UK. All right, so let's break down today's price action. Obviously, I want to take a look by first looking at the oil futures on NYMEX. This is the CLK 2020. This is the May contract for crude oil. All right, we got about 2 hours, 18 minutes. It's a little delayed because I'm not going to pay for the thing. Anyways, but currently trading back in the positive. So quite a movement, up 124% today. But of course, yesterday down 305.97%. Massive movement, of course. I mean, absolutely historic movement, right? 2020 certainly is the year of firsts, right? 2020 certainly is the year of firsts. First time we've seen a worldwide lockdown. First time we've seen, honestly, something like, just in modern times, this is the first serious time we've seen anything like this in modern times. And it's very interesting. The economic conditions, largest single decline of the stock market in a short period of time. It's the year to become sovereign and achieve apotheosis. There we go. That's what it is. Anyways, let's get into the market at large. We'll start off with Bitcoin on the daily, as we are wont to do. We'll start with the Coinbase chart. All right, interesting daily chart. Honestly, quite interesting daily chart. So let's get this off. Let's keep things quite simple. So we're going to take the entry qualifier off of the baseline and just look at the baseline for right now. All right, so we closed below the baseline yesterday. So the auto hedging strategy did kick us in to hedge our BTC position to preserve our USD equity, because statistics have shown that when we do close below the baseline, the CC baseline, that we do have a higher probability that the statistics are actually quite overwhelmingly in our favor, that we do see lower prices over the next coming weeks. Now, we are getting a little bit of upside pressure today. Price closing up 61.80 since yesterday's close. So overall, we're up a little bit less than 1%, honestly, for the total day. So not a really dramatic movement for Bitcoin whatsoever. We'll go down and drill down to the lower time frames and look for those opportunities there. Now, we did get a nice selling push yesterday, closing yesterday at negative 4.10%, with Parallax, our momentum oscillator, indicating that overall momentum is turned to the downside. So Parallax is going to be confirming trades, telling us which direction to trade in, either to the long side or the short side. It is clearly indicating for short trades at this point in time. The VOS predictive filter, which we've talked about before, that is a newer indicator that we are utilizing here, or really forward testing here, is actually going to be our exit indicator. It is not turned up, crossed up whatsoever, and it is the earliest indicator that will do such a thing. The Wadatar explosion indicator, which is going to be indicating rising explosion level, the Bollinger Band separating, is indicating when volatility and volume is high enough to take a trade, because volatility and volume are two sides of the same coin, was expanding on yesterday's daily close. So I know for a fact a lot of individuals that are utilizing systems that use a more sensitive baseline, like an exponential moving average 13 baseline or a Donchian baseline, such as the 52 or the 26 look back linked baseline. I know that they are already short because the signals coming in yesterday were quite substantial. Now, let's see what Minx is doing on the daily time frame, of course. And of course, Minx actually crossing and closing underneath the signal line on yesterday's daily close. I know for a fact that that's going to be sending a lot of people short as well. We are getting the trending zero line cross on today's daily candle as well. Now, we did get one of these not too long ago. That, of course, did play out. Let's see, we got the short signal on this daily close. So there was about a almost 6% profit opportunity following that daily signal. We'll see if we can get the exact kind of same result today. Unfortunately, looking at this chart, as we've consolidated, if we do see a big significant sell from this region, this really does begin to look like a breakdown of a distribution level. And I would not be surprised, honestly, to see prices back in the 5,000s, honestly. The alternative from this is that we are reaccumulating. This is a nice windup. We see a fake out, but none of that. And we'll know for a certain fact here when we close above these previous highs, up at around 7,300. A daily close above 7,300 right now, I think, would be all we need to really push up and break above resistance. But we really are just tightening in this consolidation period, and you really do expect quite a volatile movement whichever way we decide to break. And right now, we are looking like we are going to break to the downside. And overall, as I've said said many times, when you are looking to establish a trend following system, you know, there are several times in the market, there are going to be periods of the market, not only where your system performs amazingly, there are going to be times when your system doesn't perform well, and there are going to be times when you get a little chopped up. And I know for a fact that that chop is absolutely worth it, because in the long run, you end up throwing jabs, trying to get an opening where you can land that right hook of a good position size. And sometimes looking for an entry is such a thing. So looking to try to trade when price looks like it's breaking down is going to get you in position quickly and faster enough. When most individuals are going to sit here, see, most traders are going to look at this chart and they're not going to want to do anything, and they're going to miss the movement. Whereas those who enter into the trade and take the opportunity that they're wrong are going to capitalize and manage their risk appropriately when they are incorrect. All right, so on the daily time frame, this is going to be indicating for individuals to be hedged. We are continuing to get a rising explosion level on today's daily close, but that is repainting until we actually get a closing bar. One thing that will certainly not repaint almost assuredly is today's Minx short signal. Of course, we have about 6 hours for that to actually confirm and close. The other thing that we're looking for is going to be Water explosion to give us the continued rising explosion level. Looking for at-risk shorts for my new system. Of course, those utilizing Minx as an initiator, this is going to be a good short signal on today's daily close to take at-risk shorts. And for my new system, I need to see lower prices. I actually need to see a daily close below 67.46 to be pushing me into a short. And my invalidation currently on daily swings is going to be a daily close above 71.79. So a nice, about a good 5% range there of being wrong, which makes me feel quite comfortable. All right, going down into the meso timeframes today. All right, going down into the 4-hour time frame, you guys can see this more pronounced and contracted consolidation. You can see, every time that we've attempted to sell off from this, we have rallied from here, but unfortunately we have not made a higher high since the 7th of April, since the very beginning of April. And as we creep closer toward the end of the month, you guys can actually see us starting to form somewhat of a symmetrical pattern, but again, just overall consolidation, which the higher time frames give you more awareness of. Lower time frames here the meso time frame actually would have had one in a short on this 4-hour, would have gotten in an amazing 4-hour short here, and honestly, a good re-entry if one had waited for the close to come back within the qualifying. Let's see if that was actually within the qualifying line. GBU Wally, thank you so much for the 10 ducats, my friend. He says, miss you live, dude. I frequently watch the posted recordings, but the schedule hasn't gelled with mine. Love the awesome coverage as usual. Thank you, my friend. Highly appreciated. Good to see you. Shout out to you and Gunbot University. Hopefully you guys are crushing it in life and working the wick, as they say. Working that wick. All right. Thank you so much for the like. Blockchain gains. Highly appreciated, my friend. All right, so if we correlate this with the baseline on the 4-hour time frame, and we look at that entry qualifier, not quite. It did not close back within the entry line, but those trading meso time frames tend to be a little loose with their rules anyways. But granted, here, 4-hour short signal here, you had about a 1.59% drawdown before you actually would have achieved, I'm going to say about a 3% profitable trade. Nice exit signal currently happening on the 4-hour time frame now. So for those in 4-hour swing positions, the system is recommending or suggesting that we might actually get a little bit of upside pressure here over the next 12 to 16 hours. Let's see here. Let's turn on. Having said that, I did want to look at the daily and actually see if we're getting a bottom feeder signal. I highly doubt that we are, but we are not. Just double checking for you guys. The last bottom feeder signal that we got was on the ByBit chart on this candle right here, back on the 29th of March. And otherwise, since then, we have this losing trade, and then, of course, buying the bottom over here, which our bottom feeder signal system indicated that we do so. All right, moving on from there. So the 4-hour is actually in a no trade position. Reversal longs are going to be getting excited right now, but I don't feel that's the trade on the table. I trade in the direction of the trend. The trend is to the downside currently. So daily hedges are in order. 4-hour swing positions are currently out. Looking down at the 45-minute chart and looking for VPSV opportunities. Let's see here. We do have a single print untapped up at about 7,050. I feel like that would be a logical return. Of course, price did just come up and retest kind of the lows, honestly, of that sell-off period. I feel like we could certainly push higher up into the 7050s before actually rejecting and selling back off here. Let's see here. Down below, of course, we have single prints at 67.48 for potential longs and a violent rejection also down at 64.57 for potential longs. Now, this is just VPSV strategy. I've gone over this in the premium webinars that cover VPSV trading, so make sure that you've watched those videos if you're confused as to what I'm talking about. These are very specific scalping trade setups that I'm talking about right now, utilizing the volume profile session volume on the mini time frames. Let's see here. So we are currently trading above today's point of control. That point of contention is going to be coming around 68.48. So as long as price is above there, I actually expect us to push up and maybe tap 70.50, maybe 70.75. I would be surprised to be seeing hourly closes above 7,100. That would be influencing the daily close and cause me to rethink my hedge position. Breakdowns below, in my opinion, 6,800 at this point in time are actually going to be sending us down to our next level of support, right around the $6,400, $6,500 level. Let's see here. And probably next week, right at about the same time that we launch it for, right about the same time that I plan on launching it for the premium members, I'll probably have my new intraday strategy on stream that we can show and that we can watch. That'll be exciting to watch. All right, moving off of Bitcoin, that's the larger picture right there for Bitcoin. Moving on to Ethereum, much the same. Only in the case of Ethereum, we actually have not broken down even into the entry zone. So Bitcoin actually signaling much more bearish than Ethereum right now at this point in time, leading many to actually speculate on the Bitcoin futures contract, which is certainly a potential trade to take. The reason why is just Ethereum has moved to the upside with more volatility in recent weeks than Bitcoin actually has. So Ethereum has farther to fall in the negative case. I do have a video on the scalping strategy in the Drive, Mr. Agency. I certainly do, my brother. It is in the folder entitled VPSV Scalping Strategy. Now, Ethereum is actually right at the continuation filter. So a close below 169.80 is going to be sending us into a no trade zone. We actually need to see Ethereum prices below 150.62. So I feel like I'm going to be speculating to the short side on Bitcoin, potential long hedges on Ethereum, but no objective signal to do so at this point in time. Overall, Ethereum for me is in a no trade zone. Let's see here. Getting down to the meso trends. Getting down to the meso trends, we're still in bearish territory. Not only did the breaking Bitcoin system signal for that same short on the 4-hour as it did on Bitcoin, with full confirmation from everything, even from the Voss predictive filter. It's hard, says Ethereum at 9,000. Let's go, man. I heard they're going to add Ethereum to the index. It's going to take over for Casper. Let's see. Or Apache. I'm going to kick Apache right off the bottom. One whole Bitcoin and 32 Ethereum. Is this still the plan? That's certainly a good plan to shoot for. That's certainly a good plan to search for. I've always recommended about 20 Ethereum. I think that if you say 32 Ethereum at any point in time, I think the number of Ethereum is arbitrary, but double digits on Ethereum are certainly a good idea. One whole Bitcoin is a good idea as well. If you hold one whole Bitcoin, I mean, you are on your way to Vladimir's club, my friend. Let's see here. Ethereum on the 4-hour is actually signaling to be flat right now. We've had a nice short trade, time to be flat. Reversal longs are going to come in and try to get their slice of the pie. We'll have them have their mixed results with that, and we'll be taking the trade on continuation. Getting down to the mesos, or excuse me, the mini time frames. Let's look at VPSV very similarly. We do have actually not really an extensive single print that we haven't untapped. We really just have yesterday's point of control sitting up at about 179, 179.50. That would be the previous level of support to retest as resistance before selling off further. Breakdown below today's current point of control around 170.80, 171 is going to be sending price probably lower. Let's make sure that we have our VPSV extending our point of control to the right. Let's see here. Single prints. Yeah, kind of honestly just this magnet down at 139 for Ethereum, because those are the only untapped point of controls. Those are the only areas left to kind of refill this balance, these areas that we really haven't tested before. And honestly, it's weighted more toward the lower 130s, breaking down from this level. So that would be my bias. My bias would be short on Ethereum down to about 130. And invalidation if we are trading above 180. I think that is a fantastic risk to reward ratio trade, and it's in line overall with the way that the market is moving right now. All right, that's Bitcoin and Ethereum. Taking a look at the broader market futures as we move into today. And I think that we do have some good, data here. Obviously, the ES, S&P mini futures have continued to violently sell off all day, as have the NQ futures and the Dow futures and the Russell 1000 futures. We can see VIX spiking again dramatically, the euro dollar consolidating pretty violently, even silver and gold being caught up in the sell-off, recovering a little bit faster than the S&P mini futures than the traditional market futures. However, a pretty negative day coming off of yesterday's included sell-off as well. All right, looking at our actual ETFs, we have a very red day for actual ETF futures. Excuse me, not ETF futures. For actual ETFs, the SPY closing down below the continuation filter and generate an exit signal. Big gap down on not only the SPY, but also the Qs, also the Dow. The Dixie spiking as the world begins to move back into reserves off fear of the market. Brently crude, the actual index here, the actual commodity future, now trading down. What are we closing at right now? 1962. So down quite a bit. What is that? Negative. What's the percentile on this so far today? What is Brently? What is Mr. Bentley crude down at? Yeah, negative 22% just on today's session for Bentley crude, the CFD over on Awanda. Silver on the daily slipping, gold on the day slipping as well. T-notes spiking up to the upside. So pretty negative day overall in the markets. Turning our eyes to Forex, which I'm actually interested to see. Let's take a look at our Aussie pairs. We'll go to the daily. All right, the ASEAN continues to slip. We are selling back down closer to the baseline around 65,743. We do need to see price back up above 69 69 yen to actually be looking to take that currency pair to the upside. The Australian Kiwi as well. The Australian Kiwi has kind of stepped down into overall consolidation zone, in my opinion. Most of the Australian dollar pairs that are trading against other quote currencies. Mandy, thank you so much for the subscription on YouTube. The Australian Canadian, the Aussie CAD is actually showing a little bit more strength here, but I think it is just a matter of time before we slip below, 0.889 and start trading back down below closer to 0.8689. The Australian dollar's had a fantastic run, and the price of oil and the price of precious metals is certainly not going to do well for it as it continues to slip along with the broader market here. The Australian dollar selling down as well. The dollar is obviously quite strong, so those that are trading against the dollar are going to be doing kind of poorly. The Canadian Swissy actually slipping down, setting us up for a potential reversal baseline bounce. What's interesting about the Canadian Swissy as well is that we are putting in this nice doji candle following a pretty steep sell-off in the Canadian Swissy. Doji is indicating market decisions, so there is a possibility that we can be seeing a rebound in the Canadian Swissy. Possibly a good entry around 0.67757, right at the baseline or in that upper channel of the baseline, and potentially moving up to the continuation filter at about 0.68696 or maybe 0.6855 for a more conservative target. The Canadian yen is actually right at, so interesting with Canadian pairs here. Again, another doji right at the baseline as well. So some potential reversal baseline bounces for our Canadian pairs trading against the Swissy and against the yen. The Swissy yen consolidating below the baseline, really primed, in my opinion, for a short sell. Now, in my particular system, this did actually not generate for me because we went too long without confirmation. One interesting thing to note, though, is the Voss predictive filter actually crossing up today, indicating that it wants to see actually higher prices. So this isn't a concern for me in my system because this is a trade that I can't take due to time restriction and just how the PTP system works. But listen, objectively, I would look at this and, of course, want to short it. But what's interesting is that one of my indicators is saying you shouldn't do that. So it's nice that I don't even have to worry about doing such a thing. The Euro Aussie kind of primed for a return to the baseline here, in my opinion. Potential upwards movement. Of course, that's a reversal trade. So I'll just wait for the current downwards trend to resume before jumping back into Euro pairs. Euro Canadian as well. The Euro pairs do seem to be recovering against their quote currencies. The Euro Swissy in this trade going to have to be exiting this actually on today's daily close, because we are getting an exit signal on today. Same with the Euro Kiwi and the Euro Pound. Actually, the Euro Pound showing some of the best recovery. The Euro Yen actually plunging down today, very conveniently. The Euro Yen plunging down today and hitting my first take profit target, putting this trade into a no loss situation for me. Now my stop loss is a break even, and we're actually pretty close to that. And the Euro Dollar, which I am short on, falling back down into profit for me. So interesting day. Looking at the pound pairs, we are getting some sell-off pressure for the pound-based currencies, but I don't see a whole lot that's actually generating trades because we're either pushing right down to the baseline or we're just not quite there. The only thing that I really have my eye on is the pound Aussie, which I might be shorting at the end of today's daily close. So I'm going to be actually putting that on my watch list. But a couple things need to happen for the pound Aussie. We need to close below the continuation filter. We just need to see a little bit more selling momentum here. The Kiwi dollar, not quite there yet. The Kiwi Canadian, not quite there. Excuse me, actually the Kiwi Canadian, I am actually long on this one as well. So no exit signals today, so we'll hold this one open. The Kiwi Swissy in a no trade zone. The Kiwi Yen in a no trade zone. The dollar Canadian in a no trade zone. The dollar Swissy kind of setting us up for a continuation long. We're actually getting some confirmation on today's daily candle. So the dollar Swissy actually might be a long. The dollar yen is going to be an exit on today's daily close as well. So pretty good exhaustion after our streak in Forex for myself personally. This last week is more break even, and that's okay because I'm up, I think, 13% overall in Forex trades just this month. So it's been a good run. And I get the ability to close out mostly at a wash with a slight bit of profit. So it's okay. All right, Australian Swissy and the Chinese yuan. The Chinese yuan is going to be a long above 7.12918, but we're just not quite there yet. All right, so honestly, not a whole lot happening in the Forex. As I said, looks like I'm going to be closing out a glut of my positions today, with the only things really catching my eye being the pound Aussie and the dollar Swissy. Of course, that's subject to change by today's daily close. I see that Restream has continued to not work. I'm thinking about taking that chat off the charts because this is honestly going on a month where it just hasn't been working appropriately. And I'm a pretty patient person, but not that patient. All right, we went over Forex. We looked at our ETFs. Let's take this opportunity to show some love to our fans over on DLive and throw some lemons in this basket. Well, looks like we're not. Is it just me, or are we not live on DLive today? Looks like we are live on Twitch. but it doesn't appear to be live for me on DLive. Very interesting. All right, anyways. Let us check the questions and see if you guys have any questions for us today. Let's see here. Damian Hughes says, what's Justin's most underpriced altcoin? Well, there are certainly projects that I think are valuable, right? Like I like Holochain, I like Numenaire, and that's just to begin with. I think there's a lot of promising crypto projects. As far as what's undervalued, I mean, that's relative to the overall market conditions. So DLive down today. Yep, I see that, guys. Decentralized live streaming is not working. You know, there are certainly altcoin holdings that I have. I think that XRP stands just as much chance of appreciating in terms of investment as anything else. Overall, I don't have a whole lot of joy for the way that XRP has built their platform or built their system. I don't think that XRP is as undervalued as people think that it is. I think that I think that the reality is that at any given point in time, assets are fairly priced because that's where people are buying or selling them. But as far as future valuation, I think that the crypto market in general is very, very, very undervalued in relative terms, right? As far as, you know, if you compare where we're going to be in, let's say, 10 years to where we are now. Because the reason why these things are going to be valuable, certainly for the currencies that facilitate trade, and the coins that facilitate savings and that act as stores of value, and the processes that act as stores of value, is going to be because of what we're seeing right now, right? Ricky Thompson says, ask him if he's ever seen the chart BVOL24, certainly, divided by BVOL 7-day on TradingView, and what do I think? I think that is an interesting ability. I think that's interesting to look at Bitcoin volatility. And the only thing about BVOL24 divided by BVOL 7-day is that you really have to look into the metrics of how they calculate that, which I'm not certain. I use my own volatility metrics because I know from whence they are calculated, and that makes me feel very comfortable with them. Now, I've looked at BVOL24. It's here in my BTC Fundamentals watch list. So this is going to, if we look at kind of the line of this, we would get the ability to kind of predict whether daily volume is, you know, overall, you know, it's just an interesting volume or volatility indicator, which gives us the ability to look to see, you know, overall, is volatility greater now? Is volatility in the short term gaining over volatility in the meso term, right? In the 7-day term. Which this might actually be an interesting indicator to look at. Throw a moving average on here and trade the line cross is how I would be interested in doing it. You know, objectively looking at it, particularly on the daily, maybe you could look at it on the 5-minute chart, right? Now, if we correlate this with let's see if we found the holy grail. So the yellow chart is Bitcoin's price, and the blue chart is short-term volatility divided by long-term volatility, or medium-term volatility. 7 days is really medium-term. And here we go. Volatility starts spiking up quite high. And you can see that the first major sell-off really occurs before volatility spikes, so it's kind of a lagging indicator. But, you know, one could certainly make the argument that you wouldn't have been able to catch this last half of the downside, and that as volatility starts to fall off would be your exit indicator. Let's see if it's worked in other situations as well. So here we can see volatility start spiking before price actually starts reversing. And although it doesn't get you out at the top, as volatility starts decreasing, it certainly gets you out near the top. I mean, that's a good trade to get in here and get out around here. Let's see here. Volatility starts increasing here before the significant sell-off. And as volatility decreases, maybe backtrack about 50% of the way, but, you know, hey, who's counting? It's not perfect. Let's see here. Volatility starts increasing here. So you'd want to get a nice threshold. So let's say, 0.3? You could certainly put a line on your chart, make an indicator out of this. Anytime BVol 24 crosses above BVol 7-day, you know, or anytime this oscillator crosses above 0.30, you know, trade in the direction that your trending indicator is telling you to trade in. And let's say if it gets above 0.5, exit the trade. Or if it goes above 0.5 and crosses back down. A lot of interesting ways that you could utilize this as your own indicator. I would want to test it, but this is an interesting concept. We do something similar like this, or at least I use something similar like this in some of my systems, not this particular one. So certainly an interesting correlation. All right, with that being said, guys, it is now time to go. I appreciate all of you guys watching on YouTube, Twitch, and of course on Roku with the Investor News Channel app. Hold on 1 second, and we're going to switch over to the main scene for the outro so we can say goodbye to you wonderful people. Well, hey, thank you guys so much for joining me for another episode of Breaking Bitcoin Market Analysis. I'm your host, Justin Wise, lead analyst and senior mentor at CrackingCryptocurrency.com. Hope you guys go on to have a fantastic day. Of course, trade safely. If you have any questions, comments, concerns, sarcastic remarks, and or death threats, please leave them in the comments section down below. And my team and I will do our best to respond to you within the next 24 to 48 hours. If you are interested in building your own fundamental, verifiable trading strategy built on backtesting, objective data, and real results, make sure to check out everything that we do at premium.crackingcryptocurrency.com. That's premium.crackingcryptocurrency.com. If you're new to the channel, make sure to subscribe and hit the bell icon. That makes sure you know when we post new content, which is every day at 12 p.m. Central Standard Time. And smash the like button. We highly appreciate that. That lets other people know that we even make content, because otherwise YouTube doesn't share our content to other people. So, if you guys have any questions, make sure to join us in the Discord. We're happy to help you out there. Discord.crackingcryptocurrency.com. Links should be down below for everything you could possibly need in life. And we will be back tomorrow at noon Central Standard Time for another episode of Breaking Bitcoin Market Analysis. Trade safely, guys.